And I think it does tell us that there are strains in the market. Now, we can't know precisely what those strains are, but this is the sort of thing I would expect to see ahead of a fairly significant move up in gold. Well, the figures are even bigger now. I mean, a few days have passed, and I thought I'd look at it before we came on air. And as of yesterday, since Thanksgiving, it's 69 tons of gold and 1,324 tons of silver. Now, obviously, we don't know for certain who is standing for delivery. It strikes me that there must be many parties involved. So who could it be? I mean, you can see that in America, the people who are bullish for gold are really in a very tiny minority. The other thing is that if you look at the exchange for physical numbers, they are actually very, very high, particularly in gold. Now, what that tells us is that it's effectively it's an arbitrage between COMEX futures and London forwards. The exchange for physical basically is you go out of COMEX. What you do is you go out of COMEX and you go into a forward in order to take delivery. Now, you don't necessarily take delivery, and it could be the other way. So we have no idea as to exactly what the position is in the exchange for physical. But when you get high numbers, you know there is something going on in those markets. And just to remind you, when we had the run up, I think it was 2020, late 2020, when gold first ran up to challenge new highs, 2070, something like that. There was a crisis in the exchange for physical. And, deliveries couldn't take place between markets because of COVID and all the rest of it. And I seem to recall that HSBC said that on the exchange for physical, they lost over $200 million just on that. So this is actually a very, very serious business. The point about COMEX is that it was never meant to be a delivery market. I mean, the concept of a future is that at expiry, you have the option, if you like, to either sell your future, in which case the position closes out because for every long there's a short. Okay, so it closes out. Or alternatively, you can take delivery. But because it's a very highly leveraged market, the players in futures almost never take delivery. So why is everyone taking delivery now? Well, not everyone, but I mean, you can see that there are huge, huge quantities standing for delivery. And I think a lot of it is there is such demand for gold, particularly from Asia. We can talk about that a little bit, what's driving that. But there is such heavy demand for gold that they're even going in to try and sort of get the loose holders out of futures. So it's a bid-only market in effect for physical, and the only way you can get physical, go along to a refiner and say, when can you let us have some gold? They say back of the queue. If you go to start dealing in the forward market in London, then you might be able to get some. But the amount of liquidity in the vaulting system, in the LBMA's vaulting system, I guess is extremely low. I mean, it shows that they've got, however many thousand tons, but, in practice, very little of that is really available, if you like, to satisfy market deliveries. And we've got the same situation in COMEX. Again, you've got quantities there which are basically not really available for delivery. I mean, some of them may be registered for delivery, some of them may be eligible for delivery, all that sort of stuff. But, the reality is that the liquidity in these markets, in Western markets, is drying up because of demand from Asia. And it's running into that brick wall. And I think this is why you've got these enormous quantities. I mean, 69 tons of gold is not a trifling amount. I mean, this is very, very serious stuff. This is more than most countries' gold reserves. since stood for delivery on the December contract, on the expiry of the December contract. And also, it seems in its dying days, you see people going out and buying the December contracts so they can take delivery. And I think it does tell us that there are strains in the market. Now, we can't know precisely what those strains are, but this is the sort of thing I would expect to see ahead of a fairly significant move up in gold. But that has to be justified. It has to be justified by the fundamentals. And here we come back to the situation over debt, over the stability of credit in terms of its value. Now, clearly, there are central banks around the world who look at the relationship between gold and currency and basically want to get rid of their currency reserves and replace it with gold. What are they doing? Are they buying gold? No, actually, what they're doing is they're getting out of currency. They're getting out of credit. This is the key point. And this is also very much what the People's Bank of China has been doing. And it's being emulated by Chinese nationals, Chinese citizens, who not only take delivery of gold and bars out of the Shanghai Gold Exchange system, but they also run gold accounts at their banks. And with the People's Bank of China having reduced interest rates a little bit recently, the alternative attraction, which is bank deposits, the Chinese housewife will take out a 3-year deposit in order to maximize the interest return. That's all coming down. So, of course, on a relative basis, it makes gold a lot more attractive. And bear in mind also that any Chinese national trying to hedge out of his currency can only do it in gold, because he can't go and buy dollars, buy euros, buy Canadian dollars, whatever. Can't do that. So, gold is the only thing they can do. And of course, Russians now can go and buy gold. I mean, they can run a gold account at their banks. So this is a world which is moving towards gold while we've been moving away from it. I mean, we're asleep, if you like, while this is going on. So anyway, that I believe is what's going on. I mean, basically, we're getting to the point where there is so little gold in the West now. And of course, the next thing is that when people wake up in the West, say, "Oh, we better have some gold," they run out and buy ETFs. What's that going to do to prices? I mean, I think it's a one-way ticket. Yeah. Well, Russia, obviously. I think that the public there are beginning to wake up to this, egged on a little bit by comments from people like Sergei Glaziev and so on and so forth. Southeast Asia, very definitely, and some of the sort of Central European nations. I mean, Poland's been buying gold, and I mean, there's sort of countries which don't have much gold are having to go for it. Sorry, excuse me. And this also includes, of course, the Shanghai Cooperation Organization and BRICS communities. The central banks for these nations, some of them have got gold, some of them are heavy miners, like Kazakhstan, but so many others haven't got it. And particularly also not just the associates who were appointed to BRICS in the last meeting, but also those who would see their long-term future perhaps migrating from the Western financial system into, the sort of, if you like, the Russia-Chinese Asian axis. And lots of nations are in that position. I mean, they're sort of too frightened to move too suddenly, because they all owe dollars big time. And the other thing is that the experience of upsetting the Americans is that suddenly you find there's a regime change on you. So they are very cautious about the whole thing. And, I think this is also true of Saudi Arabia, incidentally. Saudi perhaps are also looking at this from the point of view that they don't want to disrupt the world order. I'm sure they've been talking to the Chinese about this because that's the Chinese view. India has been accumulating gold as a nation. As a government, having eschewed it completely. While their citizens, annoyingly, as far as the government were concerned, were going out and buying gold. So they're all moving towards gold. A lot of them don't like the idea, but they recognize that things are changing. They recognize what this guy Zoltan Pozsar christened Bretton Woods 3. We're moving into a new monetary era, and it's an evolutionary process. But with gold mine output and scrap and all the rest of it, it's actually sort of quite limited in terms of, when everybody is trying to increase their gold reserves and get rid of their currency reserves, you've got to start thinking ahead. And I think this is what they're doing. And this is why there's just basically none available in the West. It's gone. Silver has always been undervalued. Talk to the bunker hunts. Back, it was in the late 70s, early 80s. They tried to corner the market. They obviously came up with exactly the same conclusion. It's an interesting one because silver has gone through quite a number of changes. There was a time when its major market was celluloid film, photography, whatever. But since then, things have changed hugely. And there is no doubt that demand for silver is enormous. Now, I think the question is not so much, implying, should we be bored of this story, but actually look at what the Silver Institute's numbers show, that it has been in supply deficit for the last 4 years. And the drawdown on it has been from what they call investment funds. Now, investment funds, all very well, but a lot of them aren't really investment funds. It's a sort of balance figure, which is an assessment, if you like, by the Silver Institute, to make the numbers, on the sort of supply side and the demand side and the deficit. Okay, we've got a deficit. So what we've got to do is we've got to pencil in a number somewhere which will cover it. So you can see that to some extent the number is made up. But after 4 years, and not only that, but in this country we've got lunatics in government who are trying to carpet the country with solar cells. This demand is not going to go away. And one of the other things, actually, going back to COMEX deliveries on the silver side, is that the Indian government decided, it needed to do something nice and, ESG friendly, whatever. Stop criticism from G20 fellow members. So they said, right, okay, what we'll do is we will subsidize the production of photovoltaic cells. Okay, so what happens is that the big Indian conglomerates then set up manufacturing facilities, like I think Reliance Industries, which is one of the big ones, sort of looking to produce something like, 20 gigawatts of photovoltaic cell, output. The sort of however many units that is. Just huge. Again, carpeting in India with these things. But where do they get the silver? They haven't got any help. Oh, good idea. I tell you what, we can go and raid the markets, the Western markets. So, as I say, 1,324 tons have disappeared on standing for delivery. Now, I don't think it's actually necessarily gone out of the vaults yet, but I would suspect that, this is all part and parcel of the shortage of silver around.